Look, silver just going across $70 an ounce. That's a number most people thought they'd never see. I'm getting hundreds of messages from folks in their 60s and 70s asking me the same question. Warren, what do I do now? Do I sell at 70 and walk away? Do I hold on hoping for 80 or 100? Here's the deal. I've lived through 9 recessions, multiple market crashes, and every kind of financial mania you can imagine. I watched gold hit $850 in 1980, then crashed to $250 by 2001. I can tell you right now, $70 silver is one of those moments where you need to stop, breathe, and think clearly, because what you do next will either secure your retirement or put it at serious risk. Silver at $70 is up 268% from the March 2020 low of $19. If you bought silver in early 2020, you've nearly quadrupled your money. That's extraordinary. But here's what worries me. Every time I've seen this kind of move in any asset, I've also seen people make terrible decisions at exactly this moment. Let me give you some perspective with real numbers. Silver mining costs worldwide average between $20 and $25 per ounce. That means that $70 miners are making $45 to $50 profit on every ounce. Those are massive margins. When margins get this high, 2 things happen. First, existing mines ramp up production. Second, mines that weren't profitable at $40 or $50 suddenly become profitable. That means more supply is coming. Now, you might say, but Warren, what about the supply deficit? In 2024, we had a deficit of about 370 million ounces. But here's what history teaches us. High prices cure supply deficits. When silver was at $49 in 2011, miners produced about 760 million ounces that year. Within 3 years, production had increased by over 15% as mines expanded. Then demand fell because industrial users started looking for substitutes and the price collapsed. I'm not predicting that's going to happen. Now, I'm telling you, it's possible. And if you're 65 or 70 years old and you need this money to last the rest of your life, possible. Should scare you enough to make a smart decision. Let's talk about industrial demand. Yes, solar panels use a lot of silver. Yes, electric vehicles use more silver than traditional cars. Yes, 5G infrastructure needs silver. All of that is true. But here's what people forget. At $40 an ounce, manufacturers accept silver. At $70 an ounce, engineers start looking for alternatives. When copper prices spiked in 2011, manufacturers switched to aluminum wherever they could. When palladium hit $2,800 in 2022, automakers accelerated their research into palladium-free catalytic converters. High prices don't just increase supply, they also destroy demand. Right now, solar panel manufacturers are already researching ways to reduce silver content per panel. They've cut silver usage by about 60% over the past decade through better technology. At $70, that research gets a lot more funding and urgency. Let me tell you a story. In January 1980, silver hit $50. Adjusted for inflation, that's equivalent to about $185 in today's money. But that's the wrong way to think about it. In 1980, inflation was running at 5%. The federal funds rate was at 20%. The dollar was in crisis. The world was genuinely unstable. People were buying silver and gold out of pure fear. Today, in December 2025, inflation is around 3 to 4%. The federal funds rate is around 4.5 to 5%. The dollar is strong. We don't have a geopolitical crisis on the scale of 1,980. The reasons people are buying silver now are different: industrial demand, investment, diversification, some inflation concerns. But they're not the same panic-driven buying we saw in 1980. And here's what happened after 1980. Silver crashed to $8 by 1991. It didn't get back to $20 until 2008. That's 28 years. You bought silver at $50 in 1980 and held it till 2008. You lost 60% of your purchasing power even when it got back to $50 because of inflation. Now, let me tell you about a mistake I almost made myself. In 1997 and 1998, Berkshire Hathaway bought 129 million ounces of silver. We paid between $450 and $550 per ounce. We held it for about 7 years and sold it between $7 and $8 an ounce. We made a decent profit, but nothing spectacular. And you know what? I learned something important from that experience. Silver is a commodity, not a business. It doesn't earn anything. It doesn't grow. It just sits there. And over time, productive assets will always outperform unproductive assets, always. Let me give you the same framework I use for every investment decision. First question, what is my cost basis and what does that mean for my decision? If you bought silver at $65 a few weeks ago, you're up less than 8%. That's nice, but it's not life-changing. My advice, get out now. Take your small gain or small loss and learn the lesson. But if you bought silver at $25, you're up 180%. That's extraordinary. You've already won. The question isn't whether you made money, you did. The question is whether you're willing to risk giving back a huge gain, hoping for an even bigger one. At your age, that's probably not a smart bet. Second question, what percentage of my net worth is in silver, and can I afford to lose half of it? This is critical. If silver is 5% of your total wealth and it gets cut in half, you lose 2 and A. 5% of your net worth, that's manageable. But if silver is 30 or 40% of your wealth and it gets cut in half, you've just lost 15 to 20% of everything you own at 65 or 70 years old. You cannot recover from that. You don't have time. You don't have income, and you can't afford the stress. Here's a real number for you. The average American 65 years old has about $250. 0.0000 in retirement savings. If you have $250,000 total and $100,000 is in silver, that's 40%. If silver drops from 70 to 35, which it absolutely could do based on history, you just lost $50,000. Your retirement fund is now $200,000. That changes everything. Third question, do I have a plan or am I just hoping? Most people don't have a plan. They bought silver because it was going up. They held it because it kept going up, and now they're not selling because they hope it keeps going up. That's not a plan. That's a gamble. A plan sounds like this. I bought silver at $30 as an inflation hedge representing 10% of my portfolio. If it hits 70, I'll sell half to lock in gains and protect my downside. I'll hold the other half because I still believe in the long-term thesis. That's a plan. It has entry points, it has exit points, it has rules, and it removes emotion from the equation. Here's exactly what I would do. If I were 65 or older and I owned silver that I bought below $50, I'd sell 2/3 of it at $70, not half, 2/3. Let me show you why with real math. Say you bought $20,000 worth of silver at $25. That's 800 ounces. At $70, you're sitting on $56,000. That's a $36,000 gain. If you sell 2/3, about $533,000, you get $37,300. That's enough to get your original $20,000 back and still lock in a $17,300 profit. And you still own 267 ounces, worth $18,700. Now, if silver goes to 100, you still make another $8,000 on what you kept. But if silver crashes to 35, you've only lost about $9,300 on your remaining position. And you've already banked $17,000 in profit. You're still ahead overall. This approach does three things. It removes most of your risk. It locks in a real substantial gain. And it lets you stay in the game if silver keeps going up. Now, what if you don't own any silver, but you're thinking about buying it at 70 because you're afraid of missing out? Here's my advice. Don't. Don't. At every major top in history, there were people buying because they were afraid of missing out. And every single one of them regretted it. Don't be that person. If you miss silver at 25 or 35 or even 50, that's okay. There will always be another opportunity. Always. Here's something most people forget. When you sell silver, you pay taxes. Physical silver and silver ETFs like SLV are taxes collectibles if you hold them for more than a year. That's a maximum federal rate of 28%, not the 15 or 20% you'd pay on stocks. So if you bought silver at $25 and you sell at 70, your gain is $45 per ounce. But after paying 28% federal tax, your real gain is only 32.40 per ounce. If you're in California or New York, you might only keep $27 to $29 after all taxes. Let me share something with you. I'm 94 years old. I've been investing since I was 11, and I can tell you with absolute certainty that the people who built lasting wealth after 65 didn't do it by speculating in silver or gold or commodities. They did it by owning productive assets that generate income and grow over time. They own dividend-paying stocks like Johnson & Johnson, Procter & Gamble, and Coca-Cola that pay them cash every quarter. They own rental real estate that generated monthly income. Those people can afford to weather any storm because they have income. They're not dependent on the price of silver going up. If you sell your silver at 70, take that money and put it into something that pays you. A diversified portfolio of dividend stocks yielding 3% will pay you income for the rest of your life and probably grow over time. Treasury bonds paying 4 to 5% right now are guaranteed by the U.S. government. That's safety. That's stability. Silver at $70 is not an opportunity. It's a decision point. It's the market giving you a gift, the chance to lock in an extraordinary gain before it's too late. And history tells us that when assets move this far, this fast, the smart money takes profits. I don't know if silver is going to 80 or 100. It might. I also don't know if it's going back to 50 or 40 or 30. It might do that too. But what I do know is this. If you've made more than 50% on your silver position, you've won. Take the win, bank it, protect it. You didn't get to 65 or 70 years old by being reckless. Don't start now. Make the smart decision. Sell most of your silver. Keep a little if you want, but protect what you built. Because at your age, you can't afford to be wrong. Pull out a piece of paper, write down 3 numbers. What you paid for your silver, what it's worth at $70, and what your gain is. Look at that gain. Really look at it. That's real money. That's your money. And it's only real if you lock it in. Make your decision this week. Make the smart move. Protect your retirement.